The big beautiful bill passed this week, and whether you're for or against the bill, you might as well be taking advantage of it. Let's dive into what changed. The newly passed One Big Beautiful Bill brings back 100% bonus depreciation. It expands the 179 deduction. It increases the SALT cap by 4 times and introduces brand new deductions for retirees. Changes can be confusing, but here's the bottom line. If you understand these rules, they're not just law changes, they're tools. Tools to lower your tax bill, increase cash flow, and accelerate your path to long-term wealth. Let's break it down. What is the One Big Beautiful Bill? This bill revives key provisions of the 2017 Tax Cuts and Jobs Act, introduces new features, and here's the highlights. It brings back 100% bonus depreciation from the years 2025 until 2029. The SALT cap increases from $10,000 to $40,000, Section 179 expansions, and a $6,000 senior tax deduction. Don't worry, we'll break all these down for you. First, 100% bonus depreciation is back. It's one of the most powerful tools that real estate investors and business owners use. If you buy qualifying assets within the time frame of January 20th, 2025 and December 31st, 2029, you will be able to fully write off the cost of those assets in year 1. That's huge news for lowering your tax bill, increasing cash flow, and reinvesting faster. But there's more. Pair that with a cost segregation study. Now you're accelerating depreciation on building components such as lighting, plumbing, flooring, anything that goes inside the building, taking what would be 27 years and depreciating it in year 1. Now let's jump into the SALT deduction cap increase. Live in a high tax state like California, New York, or New Jersey, the SALT deduction cap just increased from $10,000 to $40,000 for those earning under $500,000. That means bigger deductions, lower federal taxes, and more cash back in your pocket if you plan ahead. Section 179 expansion is also huge news. Section 179 deduction allows you to write off the full cost of equipment, vehicles, and certain technologies in the year you purchase them. No more waiting. Now, with the expanded limits, you can deduct even more. Things like trucks, machinery, and even certain leasehold improvements. This is a big win for growing businesses making big moves in the year 2025. Retirees, this one's for you. If you make under $75,000 a year, this bill gives you a $6,000 deduction that you could use to totally eliminate taxes on your Social Security benefits. It's simple, it's powerful, and it's long overdue. But this bill only works if you structure your income the right way. Here's the truth. Tax savings isn't about reacting. It's about planning ahead. If you wait until the end of the year or the end of the tax season, you've already missed your window. Timing is everything. So here's your next move, depending on where you are in your journey. Real estate investors, schedule a cost seg study, time your property purchases, and update your depreciation schedules. Business owners, plan major asset purchases, combine Section 179 with bonus depreciation, and look into amending prior year returns if eligible. High-income earners or retirees, rework strategy around the new SALT cap and review retirement withdrawal strategies. You cannot afford to ignore any of these updates. If your CPA isn't proactively planning with you, it might be time for a change. Let Investor Friendly CPA help you make the most of your 2025. At Investor Friendly CPA, we specialize in custom tax strategies for real estate investors, business owners, and high net worth individuals. We handle cost segregation, proactive planning, and all the tax strategies to keep you compliant along your journey. If you're ready to stop guessing and start saving, let's talk. Subscribe, comment below, or visit our website so you can schedule your free consultation.